Hey, good morning. We're going over the US dollar, well, Australian US dollar, and I'm going to show you how this trade played out. Of course, we have a natural double top. And remember, with a double top, you got two ways you can trade it. You can trade it back to the neckline if you catch the trade early, but if you want to maximize your pip or points or ticks, if you're using stocks, you're going to measure from the top to the neck, and this is how you get your target. And voila, target's hit. If you want to see what that's going to look like beforehand, you see what do we do? We took this measurement, we put it down right here. This is our target. All right, we got confluence in too. Why? Because this was a demand zone where price broke out of this particular zone down here to give us a strong movement. So what are we looking for? We're looking for a price to eventually come back down to this area. Okay, and that is exactly what we got when we were able to measure that to get our targets to the downside. All right, and this is basically what we're looking for, and that is exactly what we got. Got a second double top that occurred too. Oh, sorry. Okay. All right, let's go look at some other setup. All right, my target was hit on Cardano. I want to say I don't know if I was on the 1 hour, 4 hour, forgot what it was. But however, this target that you see up here was actually based off of it was a double bottom. I forgot what time frame is on. Of course, it's not. It didn't show up yet again on here, but we had a double bottom. We got back up here. Also, this was an area of what we call supply zone as well too. We did get the price coming back up here, so this was a very very successful high trade setup that was very lucrative. So this was good too on the Cardano perp contracts. Also, we looked at um, I looked at the liquidation and orders of longs and shorts, and it was a massive, massive number of shorts. They got crushed. Okay, now why would they get crushed? Well, typically when good news comes out on crypto, the price drops, right? So people was really anticipating that heavy this time. However, you still got to look at the numbers and the data was showing that it was just too much. In fact, we're gonna pull up CoinGlass and we're gonna look back at it. All right, so we're on CoinGlass and we're gonna look at we're on Cardano. All right, so we got Cardano right here, ADA, and let's go back. Let's go look at maybe the last 4 hours. Let's see what's happening. Okay, all right. Now because we're in the last 4 hours, you had 18. Um, now, just look right here. I'm not going to be able to move it and hover over it because it's going to move the whole thing. We got 18.92 million that were long, and if you look, now we're getting a pullback. Okay, we're getting a pullback based off of that because we want to be contrarian in nature. But we can go down and let me go and look at the actual hour of when this occurred. So this is at 2300. So we're going to look back at 2300. All right, 2300. All right, so check this out. So at that time, it was $10.5 million worth of shorts, but it was only 3.34 million of longs. And this whole hour, if you look what happens, the shorts got crushed, right? Price just pushed up into this area, and then it finally went down. That's what we're going to look at. So look at the next hour. You had 3.9 million shorts and only 730K longs, and then you had more shorts. Yep. And so Okay, here we go. This is what you really want, and this is when you're really going to see a drop. So we got 3.8 million longs. That's a lot, and you only got 422,000 shorts. So the market would rather pay out $422,000 worth of shorts who are correct versus 3.84 million, because the 3.84 million worth of longs, you got to ask yourself how much are their stop losses as a whole. Maybe with 3.84 million loans, possibly we could have maybe $2 million worth of stop losses down there, and it's better to pay out 422K and pocket the difference than to go up and actually pay out the massive amount, the 3.84. Right, so these are things that we can use as we trade in our tool shed. All right, I'm just going to look at a couple more and then I'm done for the day. All right, so I want to look at this U.S. dollar Canadian dollar. I feel that this is going to be a great sell setup. I'm not looking to do any more buy-in on this U.S. dollar Canadian dollar, and here's the reason why. I feel like what we're going to start seeing. Uh, we're going to start seeing some weakness in the dollar eventually, and we're going to see stocks pick back up, crypto eventually have a little rally or whatnot. However, what we do, we need a healthy correction when it comes to this particular trade pair. And I feel like if we can get that correction, this is the potential that we're looking at. I mean, just at this level right here, we're talking about a 603 pip drop. And this is taking it back to this demand zone right here. Now, even further down, if we measure this, okay, also, this is a good learning point too. All right, this head and shoulders actually failed. Okay, we didn't break this neckline. One of the things that when you do trade a head and shoulders is that you really want to wait for it to break the neckline and then come back and retest. It never did any of those things, so it's really invalid. However, I love trading the right shoulder to the neckline and get out, and then after that, see what happens. So that's my trade strategy when it comes to that. Now, if you look at this huge impulse, okay, so let's look. I measured from here all the way up to here, and we have some form of confluence. So this is 61%. We like to trade to the 61%. Now we're not all the way there yet. However, if I pull it all the way down to the 61, that's 629 pips, possibly. Okay, that is huge. And if we can position ourselves to wait for the right moment to be able to scale into this and trade, that's a lot of money. Now, for me, what I would like to do is I would like to look at taking on potentially three standard lot sizes, which would be around $30 that I want to scale into. So 629, times 30, we're talking about an $18,000, between $18,000 $17,000 payout. Okay, so this is what I am looking at doing. Okay, so but I have to be careful, be patient, and I have to scale in it accordingly because I want to make sure my risk is correct. But I am only looking for sell opportunities with this. Am not looking to take this thing further, even if it goes higher. I'm not looking at it. All right, so let's see what else we got. Now, if we were to go even lower, okay, we got a lot of room to get back to some of these other numbers. You're talking about 1,254 pip drop, whatnot. So the higher time frame can work wonders. Okay, it takes a lot of discipline, but yes, it can happen. Okay, now watch this. Look where we at. We got this nice drop. So what are we looking at? We got our retracement tool, and we're getting close to the 61%. So once again, and then if you look right here, what is this? This is an imbalance. This means that we are in an area of what? This is supply zone of where price is currently, and we may get a little higher up, but we're in a supply zone. So this is an area where we want to start looking at scaling into some type of sales. Now, if I take a $30 lot size, three standards, they don't mean I'm gonna do three $10 lot sizes. I may have 15, 20 orders of different sizes, dollar, 50 cent lot sizes, and just scale it in. Okay. Let's look at this right here, and let's take it and let's swing it high, and let's see where we at. Now watch, look at this. Look where we came to. Okay, on this one, we came back to the what 61%. We did a double top up here, and then we came back to the 61% right here. And then now we got this rally here. So you see how the 61% is really on the higher time frame, is really holding up well. So what we have right now is that we got a 61%. This is sitting at the 61% region, okay, that we have. And what we want to see from here is that maybe a come down now. Remember, this move up right here has a what? 61% retracement. So what you're looking at, I'm just looking at trading the golden ratios on these, okay? And if I could trade those golden ratios, overall, I'll fare much better. All right. Now, this is the simplicity of what Forex, looking at higher time frame, getting a proper setup, scaling into the trade, and then what you would be able to say is, hey, I only trade 3 to 4 times, maybe a year. That might be a little bit extreme, but if I can get a $20,000 payout just off of this, and if I can do that maybe on 2 or 3 pairs throughout the year, you see what happens is that long term you could take less trades but have bigger bang for your buck over that time frame. Okay. Also, you will also be able to intraday trade that. So, for instance, if I'm at a long-term position that just holding, I'm not scaling out, I'm not doing anything, I'm just holding it. I can have an additional account where I may be scalping and then doing a little bit of swing trades. All right, while the other account is just accumulating and moving. Now, yes, um, you will get swap fees that will kick in over time, but it's not going to be enough to make you not want to hold. Okay, so this is not like futures contracts where you may get ate up, or option contracts with the deltas and the Greeks getting crushing you because of time. Okay, so this is the beauty with the forex. The swaps are not that bad, so that's why I love trading forex. Right. So that's it, guys. That's my outlook for U.S. dollar, Canadian dollar. I'm pretty sure there's some other ones out there as well too. They got a heavy trade setup. All right. So y'all have a great weekend. Be safe out there. Have fun. Um, and hit the like button. Subscribe. It's your boy E White. I'm out. Peace.